The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, feeling good, Lewis. Today's guest will be none other than Arch Crawford of Crawford Perspectives. He'll be on at 9:30. I have to tell you the story about meeting Arch, folks. It was at WKHY or KWHY in Los Angeles. That was the old precursor to CNBC, and we were on as a guest with Bill Griffith at that time, and the market was topping in August of 1987, and both of us were relatively bearish, and Bill was helping me promote my book, Astro Cycles, A Trader's Viewpoint, and Arch and I hit it off pretty good. He was living in New York at the time. Later, he would move to Tucson. He's been here a long time, over 20 years now, I believe. Yeah, because I've been here 30, so he's been here quite a while. But the really when we bonded was in July of 1988. We were in Los Angeles for the American Federation of Astrologers, and when Dr. David Williams was promoting my book, he gave me a really nice accolade, and so I packed up about 50 books in a box, and I was hoping to sell one or two, but I was selling it for $95, and that group doesn't spend very much, but an interesting story happened. I was absolutely able to sell all of them out, and then I had to go down to the printing place there at the Hilton Hotel where we were staying, and it was about 6 o'clock in the morning, and a woman was there, and she was printing out 10 copies of my book and on the printer. And I said, gee, that's interesting. I said, what is this? And she said, oh, it's this new book on astrology that's really, really hot. And I said, you must be the author. She said, no. She said, I'm not. She said, I wish it was. She said, it's a very expensive book and none of my friends can afford it. And I said, you're making these for your friends? And she said, yes. And I said, well, what do you sell it to them for? She said, well, I try to make a profit of $10. I said, oh, that's pretty good. I said, would it help for me to sign the books for you? And I thought she was going to turn white as a ghost. But anyway, I told her it was no big deal, not to worry about it. And I did sign the copies, actually. But that was one of the funny stories I remember going back many, many years ago. Boys and girls, something big happened last night, in my opinion. I don't know if it means anything or not, but it's something that we've been watching for quite some time, and that is in this U.S. dollar index. I want you to see that last night we actually went down and we made another low at 92.41. The previous low was 92.51. The 1.618 number was 92.51. We took that out by 10 ticks, and then we popped up, and we've actually held that. Now, you can see that clearly if you're watching the euro, and because the euro is 53% of the U.S. dollar index. Let's get this up here so you can see it. You can see the big ABCD there. That's perfect. We did make a new high from last week by 6 pips. That's equivalent to what we did in the dollar index. And now we backed off a little bit from that. This is very important, folks, because this is the whole reason that maybe these if the Fed's going to keep printing money, it's going to make Treasury bonds, weaker and weaker. Now, we went up to that 183 level. It's talking about Treasury bonds. We went up to that 183 level, and so far that has held. And so we want to say that if it closes above that 183.05, you certainly can't be short. But until that time, you want to be able to, stay from the short side. That's the way it looks like. The way I'm looking at it this morning, and believe me, I'm wrong a lot, but I'm occasionally right, so that's the key thing. One other big thing happened yesterday that we featured in the newsletter, and that was the fact that the crude oil went up to the exact fib number at 43.56. The fib number was 43.52. We went all the way down to 41.78. We're having a little 70 pip rally here this morning, but any move above this 44 level now would be very bullish, to the crude oil, in my opinion. But boy, it went right up to that resistance. And when it hits those numbers perfectly, you really have to, just like the 1.618 in the dollar index, you certainly have to respect it. At least I do, because I'm just basically looking at the numbers. By the way, if you have any questions, it's 877-927-6648. One other comment about the open interest. I'm going to try to give you a little bird's eye, because we had another big drop in open interest in gold again, folks. I mean, I know it's hard to believe, but there's people actually leaving the market in the gold market. And silver, and I'll show you silver in just a minute. We hit 28.50 in silver today, folks, and the open interest in silver yesterday was up a whopping 34 contracts. Now, what I do when I look at open interest, and if you look at the top bar up there, I'm only looking at going from June all the way through August. You see those? It shows the difference. The light ones are the futures, the dark ones are the options, and if you watch what's happening, what you're watching is if prices are going up, okay, and open interest is dropping, that means short covering. That's what we're seeing in gold now. We've lost well over 13,000 people in contracts in the gold market over the past week or so during this run up from 1940 to today's high was 2,076. We took out the previous day's high by about $6. So there is going to be a correction. I don't know if it's going to be in my lifetime or not, but that's something that is going to happen. Now, if you follow open interest, I think the master of this is a guy named Peter Brandt. He's a very, very successful fellow who's been around a long time. He's a little eccentric, but he's very, very bright. If you look him up, I think he's the one that probably has the best information on open interest. But folks, I keep it just as simple as possible. I keep telling you this day after day, but that's what I do. I keep it as simple as possible. That's neither here nor there. That's what I'm trying to do here. Now, someone's sent us a chart that he asked me to talk about on the air here. I don't quite understand it, but I'm going to try to give you my 2 cents worth. This is a chart of the XAU, which is the gold silver mining index. And if you'll get up here, you'll see here he's comparing these moves that we had way back in 2011 when the market was topping up there. You see that blue area, and then he's comparing it to what's happening here. And we're quite a ways from that, so we still have a long way to go. And he's talking about an 8.6-year cycle, folks. That's so far above my pay grade. I was reluctant to bring it to your attention, but because we are moving so strongly in these things, I think it's important to realize that sometimes, you have to pay attention to it. Remember, we had Bill Meridian on last week, and I had him on Tom's show yesterday. By the way, today's show, I'm going to have Stan Harley on today. If you folks want to listen to Stan, that'll be at 3 o'clock today, and we'll get this up here. But let's print this out here and show you. This is Bill's chart on the gold, and he said it would be topping sometime in early August. Well, here's August the 6th. This is early August, so I was assuming that was going to happen, but we've been straight up for 3 days, well over $120 an ounce. So 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and Tom O'Brien, one of the masters of the gold market, just posted a chart here that some information into the Tiger Den, and that is that the ETFs for gold and silver have been increasing their contracts, I guess, quite a bit. Now, that's something that I don't follow. I follow the futures market because you actually can take delivery of the gold, but in the ETF market, you get a piece of paper. That's a big difference. But I'm frankly, I just try to keep it as simple as possible, folks, and probably, who knows? Anyway, let's move on to the natural gas here. We had that move last week. You remember when we backed off to that 179 level, that was a 382 retracement, and then boom, and we took off like a, scalded duck. And as you can see here, once we took out the highs of the previous week, which is 192, the market has basically been in a parabolic run from 192 all the way up to 228, where we're trading this morning. We're approaching the 61% retracement. It comes in 234, but frankly, it looks like it really wants to go blasting through that. So let's remind ourselves that when these markets go, they can really, really move. So we still think there's a lot more to go here in the natural gas. Another one that I wanted to mention here, by the way, we'll have Arch on at the break here. 1 second. I wanted to talk just a little bit about the platinum because it's been lagging badly. But today we hit the price target that we've been waiting for in platinum. That was at 10.10 an ounce. And so we have hit that so far. You can see the ABCD pattern in there. The old high we had back in January was at 1,050, and we're still 50 points away, even though the gold has rallied quite a bit. When I look at the price of platinum and versus the price of gold, it's just hard to believe that it's trading at such a discount to the gold. Like years ago, it was $1,000 an ounce premium, and now it's more than $1,000 an ounce. Well, just about exactly $1,000 an ounce as a discount. So not much interest in platinum on a fundamental basis. Let's take a quick look here at what silver's done, folks. We hit 28.50 in the silver here. This thing is going crazy. I spoke with my friend Leroy over in California, who I deal with coins, who have for the last 50 years. But the main thing, well, it's not been 50. Yes, he's 70. Yeah, it's been 50. Well, 48 years. He said they're not going crazy with with the gold buying and the silver buying. He said he gets sporadic orders. He said it was nothing like what it was, in 1980 when the market, hit $54, which never really traded there in those years. I mean, I don't. If you folks might not remember this, but when silver was topping in January of 1980, the bid and offer, because it was going limit up because of what was going on at the COMEX, there was really very little silver that transpired between $38 an ounce and $54 an ounce. That was all baloney. And the reason why you knew that is because the bags of silver, they were the ones where the real money was being made on cash transactions. These others were on the futures markets, and the futures markets were going there, but there was not any cash transactions above that area of about $38 an ounce during that time. It was really crazy during that time, but that's what happened. And then it went into a 30-year bear market, folks, from 1980 down to 2010. That's what happened. We went in gold, we went from 865 down to about 235, and I believe that's when Tom O'Brien was really getting the handle on the gold market, and he really was very, very bullish at that time, and I think he's remained bullish all during this time. So it doesn't look any, hey, I'm not. We made a higher high last night. I'm a short-term trader, folks. If I'll take a nibble at it between $5 and $10, but this is too wild for me. I'm waiting for a really nice pattern to say, yes, this is where I can go in and not risk very much. I don't see that anywhere in here, so I'm not even going to pretend like I'm going to do that. But I talk about it. I show you the patterns in the videos and stuff. It's quite clear what it's doing, but, that's just too risky at that point to do it. The old adage is there's no one as bearish as a sold-out bull, and I sold out of my gold. I thought I did a really good job, $75 an ounce, and I left $140 on the table. And if you don't think I feel bad about that, you're wrong, because I do. And and not only that, but I realized when it was happening, and I just didn't want to chase the market because of risk, and that was the main thing. Now, I want to share another chart. This is the GDX. This is the ETF for the gold miners. This is the XAUD. Yeah, fear of missing out. That's true. You're absolutely right, Duffy. Here's the gold miners index, and you'll notice here that we're approaching, well, we hit it. We hit the 78% level at 29.28 on the weekly gold miners index. So whether that means anything, I don't know. But if you look down there at the bottom, you'll see there in March of this year, what were we making? We were making an exact 78% retracement. You can see at 0.79 of that move that happened from 2016 when gold was trading down at 1,030 an ounce. So this may or may not mean anything. I don't know. Remember, we had the full moon here. That came in here on Monday, and here we are 4 days into it, and we've had some really wild swings in some of these things. So I just can't chase it here. But the fact that the silver made 28.50 is really it's really quite amazing. Now, Mr. Z has been kind enough to post one of his charts. I'll get it up here to take a look at it because we're watching it. Oh, just a second here. I don't like it when that does that. Hold on. I'm going to press the chart, put the chart of the November soybeans up here that Mr. Z is talking about here. What happened? There we go. You can see the lines. Now, what I'm going to do is I color mine in just to make it, prettier, just like my kids did when they were little. We're going to take a look here at this same chart. Here we are coming in November beans, and I really think we got a chance here to make a possible good bottom in here. We're short soybean oil right now, so if you're in that, make sure you have your stop in at break even, so you don't have to risk very much at all. But there's a possibility here we might have a good rally here in November beans. And we're in the real heart of the growing season now, folks. The month of August belongs to soybeans, so any problems in weather can really make the market move very, very dramatically. Hasn't happened yet, but if it does, it can happen very, very quickly. The key ones today, we'll have Arch on in just a minute, as I mentioned, but we really need to watch that U.S. dollar, because if it breaks below that 92.40 level and closes down there, that's going to be extremely bearish to the U.S. dollar, and i.e. bullish to the euro and even potentially the pound. But right now, it's right at the flat-out moment of truth, folks. I mean, the fact that it went down, made new lows, and didn't do anything means something from a technical basis. You're getting market information from there. So that's it. Also, that crude oil, it's vulnerable. If we pop above $44 a barrel, that means that's a failed pattern. And again, you can have a tremendous run to the upside. Now, we want to take a look at the Bitcoin. Because the cryptocurrencies and blockchains are getting more and more popular. You'll see here that we're up against a 787. We'll be right back, folks, with Arch Crawford Perspectives.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ADCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a minute here, and Arch is just about ready to be on the air here, but it'll be a few minutes. I posted a chart here. It's a 60-minute chart going over the last 10 days in the gold. You'll notice that we had that pullback here on the 3rd, right at a 61% retracement. We had the 61% retracement pullback on the 4th. That's those little dotted lines in here. And you notice how they measured up here to this 2027 level. Well, we went $50 higher than that, folks. That's why when these patterns fail, oh my goodness, you just can't stand in front of it. I mean, that was a 1.618 expansion there at 2028. And, it backed off actually just about about $11. And then, oh my gosh, it went through it. Now, that can be a big advantage if you're an aggressive trader, because if you go above 1.618 expansions on the upside or the downside, that's when you can be aggressive. Just like with that U.S. dollar index, and the euro, because if the euro pops above that 119.40, 119.50 level, that thing could really run. And not only that, but there's very little selling in your way, so you could. If you want to press the market, that's how to do it. I don't do that anymore. I did it when I was a little young buck, but now I'm just, I just try to nibble away, keep my little real estate business going. No, I don't mean real estate, my retail business going here, because I view myself as a retail trader, because some days I'm selling cattle, some days I'm buying hogs, some days I'm buying soybean meal, and that's what I look for, is to try to find these patterns that line up to give you a really good opportunity without risking very much. The whole key is you don't have to risk very much. And that's the real beauty behind these things. They don't always work that way, but when they do, they work very, very well. So if you figure you can hit about 6 out of 10, you're going to do pretty good, but you got to watch the losses. That's the main thing that you want to keep yourself in front of, watching these losses, because that can really get you into a lot of trouble, and you don't need trouble. That's for sure. I had another question about the platinum. Let me bring that platinum chart up again, because someone asked about the ABCD structure in the platinum, and I've got it posted in here, so I hope you can see it. You'll see that dark red line there. I thickened those so you can see them a little more clearly, but you'll see the measure went to 1010 in the platinum, and so far that's been the high of the day. And that pullback that we had just the other day, when we dropped $100 in platinum, we went right down to 893, stopped exactly at the 61% retracement of the previous low, and bada bing, bada boom, away she goes to the upside. So anything above 1020 would suggest that we're going to take out these recent highs in the platinum. I think the old high in platinum is around 2,800, but I don't even know where it is. I haven't been so long since I've seen it. Now, someone's asking for KC. Is that coffee, Bob? I don't know if that's what you're talking about. It could be Kansas City wheat, but I think it's coffee. We'll take a quick look at the coffee, because that's been another one that has been very good to us. It looks very similar to the hold on, get this up here. You'll see here we're approaching the 786 level now, folks, up around 122. The last time I checked coffee, it was about a little above 120. Is it still? We'll see. ETF is JO. I don't do anything with those ETFs, folks. I have. I just don't trade them. I've looked at TBT and TLT, but frankly, I'm a futures trader, and I'm not gonna change after all these years. I have to dance with the girl that brung me, and this is what I'm gonna do. I know those ETFs are something. I think, is that the one that Mr. Buffett calls the weapons of mass destruction? Who knows? But there's so many weapons out there. You don't need any mass destructions. Of course, they never did find the weapons of mass destructions over there. There was another big lie that was told to us many, many years ago. So that's neither here nor there. By the way, in our show yesterday with Bill Meridian, we had a really nice chat about the election, and he basically said, looking at the charts of both of these gentlemen, it was going to be a toss-up, and it was going to be a very, very close election. Gee, that's really telling us a lot. So hopefully we'll get the results of the election by July, and we'll see what's going to be happening at that time as we go through some of these things. Now, one of the questions is, how can gold keep going straight up when Bill said it was going to turn down in August? Folks, this is August the 6th. He said it was going to turn down in August. That's what he said. Now, that doesn't mean it's going to be the 1st of August. It could go all the way out to the 31st of August. I don't know. And you're right, Marshall. It could be what year. But he did say, and you got to respect the man's work. I mean, he's been spot on these markets for quite some time. And he said that it was probably going to top. But he didn't say it was going to be the top. He just thought it would be back off a little bit and then go higher. Folks, when you see a chart like that silver chart that we're looking at, when you see something that goes parabolic like that, something fundamental maybe has happened here. I don't know. But remember, silver has been to $54, I believe, 2 or 3 times now. We hit it in 1980. We hit it again in 2011. I know we've hit it twice. So, silver could go back to 54. It's only halfway there. 28 times 2 is 56. So, it could easily do that. I don't know. That's why I think those little silver rounds are a good idea for them to see what's looking at. Okay, someone's saying about about Apple calls. Yeah, well, those things go up quite a bit. I think that Apple has been probably one of the best long-term, well, it's the number one stock, of course, but it's probably been one of the best returners in history, if I'm not mistaken. But I don't follow those numbers that quickly. So whether that's going to be a big deal or not, I don't know. I watch Apple because it's the biggest stock in the world, and it gets the most free advertising in the world, and it has some great products. So I don't know what APS is. Did I see? Oh yeah, APS. I'm just looking at it. Hey, Arch Crawford, are you there, my friend?
I am right here.
Ah, that's what I like to hear. Listen, I've posted your chart for the gold. Everybody here is talking about gold today, and you want to give us your heads up of what you're seeing, my friend?
Well, fortunately, Crawford Perspectives gave a strong buy signal on it June the 3rd last year.
Oh, very good.
So
and you're still long? Oh, that's good. I knew you were still long, but boy, we've rallied. We're rallying $100 in a $50 a day. What's your feeling on how much higher it's going to go, Arch? You have a long-term perspective on the gold?
Well, I've been saying, it's going to go past the old high. It's going to go past the old high, but I think that we're starting a huge move because the world is in such shape right now. It's the only thing you can trust.
Mm-hmm. Well, you certainly have.
A price, I mean, what, 5,000, 10,000, 15,000?
Okay.
I'm not saying it's going to do that in, tomorrow or the next day. But I don't think it's going to stop anytime soon.
Arch, stay with us, my friend. We have to pay a bill. When we come back, we're going to talk about the Dow Jones Industrial Average. Arch Crawford of Crawford Perspectives, folks. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Arch Crawford, Crawford Perspectives.
Larry?
He just gave it. Yes, I'm right here.
I'd like to. I did some analysis on the gold chart while we were off, so.
Okay, good. Why don't we take a look at it again, and we'll go right back to it. Go ahead, Arch.
Okay, well, we went up to 1,900 and about 20-something, and then came down to about a hair below 1,050. The pattern that it stayed in there for 6 or 7 years was a little better than 300 points. So I would say the 300 points, it went up to twice that, and then that was the old high. And so another 300 points would be the first maybe decent pause. But I would say that the whole pattern of the 900 points counts to 2,800 to 3,000. And I think that could be done in I don't know. I think things are going very quickly right now, and a lot of things are falling apart in the world, and I do think that the gold and the silver are. I've got half of my IRA in them for.
Good.
So I'm ready to go with it.
I'm sure you are. Listen, my friend, let's take a look here at the Dow Jones Industrial Average. What's your feeling on that?
Of the ones of the indices that I have up, the Dow Jones is acting the worst. The NASDAQ, of course, is screaming, and that is 5 stocks that are taking the bulk of it. And so I don't think that's terribly healthy, but as long as it's in an uptrend, the NDX 100, the real hot shots, are the best to be in, and when they turn down, they'll be the best to be short.
Yeah, that's pretty much the same.
The Dow has been in a narrowing pattern. It's in a little triangle bit the last couple of months, and it needs to break above 27, and then later, if it hits 28,000, it's above all the recent patterning, and the old high is up around little short of 3,000, 2950 or 2940, something like that.
Yeah.
So I would say that those are possible, but I'm not betting on them. The most positive thing about the Dow Jones is that the 50-day moving average is crossing above the 200-day right sort of as we speak.
Okay. Now, let's take a quick look here since we're talking about stocks. We'll take a look. I've already posted the NASDAQ, and it shows that. But if we look at the S&P 500, boy, we've had some tremendous moves here from January into March and then back up again. I mean, I can't remember seeing this much bullishness with so much bearishness out in the market. So it's basically definitely climbed the proverbial wall of worry. What are you seeing in the S&P, Sam, Arch?
The heavy resistance is around the 3,400 level. The old high and a trend line or two that are also matching there. So if everything can get above there, then there may be huge possibilities on the upside. I just can't see that happening in the world right now. They're pumping money into it like crazy, so that the only way I can see much higher prices is if we go into a hyperinflation, and that's not going to be good, but it's probably be better to own stocks than anything else.
Arch, we have a question from one of our listeners, and that is, since astrology is your specialty, are you seeing anything in the stars that tell us that we could be looking at a turn down in the market?
Well, the big thing, I wrote the first couple of paragraphs in my letter that came out Monday about the full moon square Uranus on Monday, and I thought that would do some pretty terrible things, and including I was saying that this suggests the possibility of earthquakes much larger than usual. Physical earthquakes or not, a great many people are going to feel jumpy or worse. Be careful. And, of course, we got that explosion in Lebanon within a day.
Yeah. Well, I know. Folks, Art shared something with me last week when Regis Philbin passed away. You were on the Kathy Lee show with Regis, and he sent you a really nice note. You want to tell us your experience with Regis?
Lord, it was quite a few years ago. I was on his show, and we stayed in touch, and I sent him the letter for a while. And his passing, I mean, when I was on the show, he sent me this note that says, Arch, you're the only one that knows what's going in the market. Good luck on best of whatever for nailing it. Best, Regis. And I treasure that.
I can imagine that. Yeah, that's whenever you get something like that, it's really good. The only note I have like that is from my sister. So good. God bless you, my friend. Hey, let's move over and talk about.
I've written you one.
Yeah, that's right. All right, let's take a look here at the black silvery gold here. What do you think about the oil here, Arch?
Okay, let me get to that page. It's in this terribly narrowing pattern above the 50-day moving average and below the 200-day moving average. Now, the 50-day is rising fairly rapidly, and the 200-day is declining fairly slowly. So it's putting a pincher movement in the price. And so after these huge down and huge back up, it's being sort of crimped into a smaller and smaller area. It's got to break above. Actually, it broke above yesterday and fell back below the 200-day moving average. And right now, the high of this morning is on the 200-day, And that's where the resistance is. If it can close above it, I think that would be a very strong signal. And if it can't close above it, not just today, but in the following days, I would consider that a very, very negative one. But I think in this atmosphere, any real commodity things that's real is going to do better than a lot of other things. But the oil usage is way down.
Yeah. Folks, Arch Crawford, Crawford's Perspective. Arch, we just hit 2080 in the gold, so it's on its way to 5,000. We'll have you on again soon, my friend. Thank you.
You're welcome.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We just hit new highs in the gold at $2,080 an ounce. We're now trading at $2,077.5. And it's very, very crazy. Anyway, well, not crazy, just doing its normal thing, that's for sure. So let's pay attention to it because there'll be some great opportunities. We will get a buying opportunity in the gold. When it will come, I'm not sure, but hopefully we'll be able to see when it does. Keep in mind, folks, the really key things to pay attention to from our perspective is the euro at 119.26. If we start getting above there, that's telling us that the U.S. dollar index is kaput. It's going to be going below 92.41. And believe me, folks, that could be the reason for all of these markets just going ballistic, because that probably means that the U.S. dollar means trash to everybody else because they're printing so much money, and that might be the start of inflation. I don't know that, but all I know is that if these things start to run, that's the real reasoning behind it. So that's it. Someone's asked a question, where do they sell their silver? I said, I would not sell silver. If you own silver and you got children, just give it to them. And that's something that I think it's a poor man's gold. And, so always pay attention to it. If you have to travel a lot, it's better to own the gold if you have to move from one place to another. But, silver is a beautiful metal. Those silver rounds are absolutely gorgeous. I like the silver eagles that the U.S. government prints. They're just absolutely beautiful coins. Good to give as a gift, too. So that's another reason that it's a lot of fun to pay attention to. So those are the main things that we're keeping an eye on. The stocks are still, Dow's back above positive a day, actually pretty good. So is the S&P, and everything looks copacetic in here. We got to 33.20, and we'll see what's going on. The last in the Treasury bonds, which we think are going to go lower, is at 82.26, but we'll see what happens as we go through and look at some of these others. So live every day in an attitude of gratitude, folks, and we'll see you tomorrow. And there'll be no guest tomorrow, but we're going to have a full show. I'm going to do things on foreign exchange that I think you'll like.